Hello, everybody, and thank you for joining us for the Red Cloud Oktoberfest Fall Mining Showcase. I'm Sebastian DeClute, Senior Vice President of Marketing at Red Cloud Financial Services, and I have the distinct pleasure today of introducing one of our top pick copper stories out there, and one you should definitely be watching, and its President and CEO, Sam Lee. Sam, thanks for joining us today.
Thanks a lot, Seb, and thanks again for having us and all the support that Red Cloud has provided over the past few months. A quick recap of our project before we talk about recent developments. We are an exploration and development company that's looking to advance a camp district scale project with our already $1 billion NorthIsle project located in British Columbia, Canada. This project is just one of a number of very large porphyries along a trend that spans over 50 kilometers across our property and starts at the historical Island Copper Mine operated by BHP. We clearly believe that the best place to find a mine is right next to an existing one. So prospectivity-wise, infrastructure-wise, reducing a footprint of a project and receiving support from First Nations and community are all essential to this equation. Our commitment towards sustainability is authentic, and not only focuses on environmental impact, but how we are working with our First Nation and community partners to advance a multi-generational camp for many decades ahead. On a macro level, the world clearly needs more copper production in order to achieve its electrification and carbon neutrality goals. And this is just the starting point to get this point recognized in the market among strategics. Simply put, we believe that this is the right time, this is the right market, and this is the right opportunity for today and for the future. Please note that during this course of the presentation, I will be making forward-looking statements, and I encourage you to read the following slide for additional notes about the forward-looking nature of the information that we are discussing today. So we have in our project, our NorthIsle project, a copper, gold, and then moly and rhenium long life 22 years project that produces approximately 156 million pounds of copper equivalent over the life of mine. So the economics is defined through a preliminary economic assessment that we issued in March and outlines a $1.1 billion after-tax NPV, 8%, and nearly a 20% after-tax IRR with a short payback period of 3.9 years. So our strategy is very clear. It's the rapid and sustainable development of this project while identifying a camp multi-generational area within our enormous 50-kilometer strike length property. So the people that are behind this have over 200 years of finding, of financing, of exploring, of developing, building, and operating world-class mines. And we believe that we're all focused right now to affect our strategy moving ahead. So I won't spend a lot of time on this because a lot of people have heard me talk about this. Obviously there's a view that there's a significant supply gap ranging from approximately 7 million tons to greater than 8 million tons by the end of this decade. And to put that into perspective, that is really 7 or 8 of the largest mines that are producing today of incremental supply rather, that needs to come online within this decade. So clearly our strategy of developing this as quickly as possible well within the decade is our focus. I think that there has been a little bit of a lagging effect around not only the equity markets, but this appreciation of this demand supply deficit coming up over the next 10 years. I think we're actually starting to see a little bit more of a risk-on attitude, not only as it relates to the commodity prices, but these projects that are extremely highly levered to these commodities. And we're starting to see that come into fruition today with the copper curve actually being in backwardation. And obviously the increase in analyst consensus copper price ranging from 350 to 360. A lot of transactions we've seen in the market, the last 2 have been copper transactions of significant magnitude. So the Matsa deal that was bought out by Sandfire for nearly $2 billion, and the recently announced 45% interest in Sierra Gorda that was purchased by South 32, which was approximately $1.3 billion. So these are deals that are really indicating that we are playing a catch-up trade, and not only within the market, but the strategics are playing that trade as it relates to some of these recent transactions in the market today. So in terms of our profile, like, we are a clean company. We've got very tight shareholder base. Insiders own 16% on a basic basis, over 20% on a fully diluted basis. We've got enough cash. We've got $7.2 million as of last quarter. We have no warrants. That was a real strategy when we raised the $10 million earlier on this year, to not cap our share price. And that's coming into fruition today, as I think over the past month, our price has increased over 60%. And that's not being reflected in this chart today, but as I mentioned before, this risk-on attitude, we're starting to see that slowly creep into the market, and we're really playing a catch-up trade today. So this is an important slide as it relates to our relative valuations. Clearly, we are undervalued, but how do you substantiate that? Well, some of these transactions that I talked about that would have been done, bearing in mind that they're for producing assets. We are not a producing company yet. But we're talking about transactions for that Matza and Sierra Gorda deal of 1.2 times net asset value, which is historically above the average of precedent transactions for producing companies. And that has cascaded in through to the producers and the developers, with even the developers over the past few years transacting at a kind of 0.3 times to, on the high end, 0.9 times. So if you kind of look at this slide that we have right now, where we're trading at a 7% or 0.07 times our net asset value as defined by the analyst consensus community, there's clearly a lot of room to go. That is, even if you were to average it out over a course of the cycle, we're well below precedent transactions, and clearly against our trading peer group, we're well undervalued relative to that group as well, which is a bit confusing if you think about it. If you look at the top chart, we have over 2.1 million tons of copper equivalent in resources, and that's all in indicated resources, which is a significant resource base. And that is something that I think hasn't been appreciated and will be very soon appreciated, not only with our name, but with general porphyry names, given that over 80% of copper production in the world come from porphyries. And to have a reasonable attempt at solving this deficit, production needs to come from porphyries. So as I mentioned before, we've got over 200 years within our management and board that have focused on finding, building, financing, and developing and operating world-class mines. We've all worked for big organizations. We've got great pedigree, and our focus is to use that advantage and that experience, and to remain nimble as a junior company is able to do, to focus and to move this strategy along. As I mentioned before, sustainability is really the core of our focus, and we can do that through three means. And one is contribute to the reduction of carbon emissions. We can realistically look at this project as being a net zero carbon emission mine, or as a very low carbon emission mine, given that we do have access to clean BC power that is all generated from renewable sources. Connecting with our communities is absolutely important with us, given that this is only a 7-hour drive from where I live in Vancouver. It's on the northern end of Port Hardy, Vancouver Island, and we view that community as our community. And thirdly, making sure that our footprint is as small as it can be as it relates to not only permitting this process within a very reasonable time period, but also staying within our lane and advancing a project that we believe we can advance quickly. So this map really does encapsulate a lot of what I'm saying as it relates to, position A. So we're in the gray, we're on the northern part of Vancouver Island. We're only about a 30-minute drive from Port Hardy, which was a town that was established many years ago and built by Utah BHP back in the 70s. The Island Copper Mine, which is the mine that they operated for over 24 years, sits just right in the bottom right hand of that quadrant. We are only about 25 kilometers away from that island copper, historical island copper mine. There exists currently a deep sea water port, which is arguably the closest deep sea water port from continental America to Japan, which is where BHP sold this concentrate. The concentrate is super clean. It's copper and a moly concentrate. The system is very similar to the Island Copper Pit, where they produced a copper moly concentrate as well. The gold reports into the copper. As you can see this district play, you'll see the trend around what I'm talking about, this 50-kilometer porphyry trend. The outline in blue are the defined resources and the PEA is describing. And the gold-colored, the bronze-colored projects in Northwest Expo, Goodspeed, and McIntosh, and Pemberton are all porphyry occurrences along that trend, again, that starts at the Island Copper Pit. So we've got the roads, we've got the power, we've got access to a port, we've got a massive 50-kilometer strike area that can be and will be defined over the course of the next few years to define, a much larger camp style play. The economics around our PEA are quite sensitive to copper prices, you can imagine. We ran our study, that's the $1.1 billion Canadian NPV at $3.25 copper and 1650 gold. An increase of 25 cents in copper, approximately 25 cents in copper. And at spot gold prices as of February 2nd, increases the NPV 8% after tax by $300 million, which is absolutely significant. So in terms of our exploration play, very quickly, it's twofold. It's building out our near-term deposit expansion, so building out Red Dog and Hushamu into a much bigger project with higher grades, and then targeting our new discoveries, which encapsulates Northwest Expo, Goodspeed, McIntosh, and Pemberton Hills. The really good news here is that the surface expression at our new targets are consistent across all of the deposits on our property and are also consistent with the surface expressions and the geology that we understand at Island Copper, BHP's Island Copper. So the way we're prioritizing this is quite systematic. We're currently drilling Northwest Expo. We're waiting for assays on Red Dog. We've already drilled out Pemberton. We're moving to Hushamu next imminently. In terms of our bigger discovery targets, it'll start with McIntosh, which is just adjacent to Hushamu. We've already initiated mapping and IP over the course of the next year. We'll move into drilling very quickly, and then of course permitting and drilling of all of these other prospective areas, including Northwest, Goodspeed, and Pemberton. So just to give you a glimpse of what we're talking about, this is McIntosh. This is the exploration target that's right adjacent to Hushamu. Hushamu is right in that valley that you can see behind it. And these surface expressions, these high-level white-orange porphyry alterations, as where the arrows are pointing, this has all been covered by forestry roads, right? So, put this in perspective. If this was in Chile and we didn't have any of this top cover, we would see these massive alterations all over the place, and it would have been drilled a long, long time ago. So this is really where our core focus is, not only on McIntosh, but across our 50-kilometer strike distance. This is just apologize, I didn't move over. There you go. Our next focus was going to be Goodspeed. This just gives a depiction of some of the somewhat rare porphyry-related stockwork that we're finding on these surface expressions. So this is something that we're going to be advancing. We're already advancing the mapping and IP over the next 2 quarters. So in conclusion, again, our story is quite simple. We're an advanced stage exploration development company that's looking to identify a camp scale district. We're committed to developing our project within the heart of the cycle during a period of forecasted supply deficit. We have started the key critical path items defined on this slide that will help to ensure that our project advances within this window of opportunity. We have accelerated our exploration activities that will help us catch up and realize the massive potential of this geological system. And finally, we will be actively seeking out accretive partnerships that will enable the execution of our strategy. Thanks very much, and happy to take questions, Seb.
Thanks, Sam. Just really quickly, as we're running out of time here. First off, can you work year round, which is important to shareholders?
Yes, we can.
Perfect. And then the second one is, how would you break out your wildcat exploration budget versus resource definition?
So this year, it would have been two-thirds wildcat exploration versus one-third resource. I wouldn't say definition, it would be resource expansion. So none of this drilling, 10,000 meters this year, was infill. All of it was step out. So as I said, one-third of it would be resource expansion and two-thirds would be new discovery.
That's awesome. Well, keep an eye on this story, everybody. It's definitely one to watch. There is research on redcloudfs.com. If you choose to read it, I would recommend that you do. It's a great piece. And thank you very much